Hello, everyone, and welcome to today's session. So, today we are going to continue chapter number 5. Before we proceed to the detailed discussion on chapter number 5, I would like to ask few questions on the previous part that we have already discussed as a quick recap kind of thing, and then we will proceed further. Okay, so let's discuss what we have already discussed in the previous session as a quick recap. Now, can anyone tell me what are the objectives when it comes when the auditor wants to send external confirmations? If auditor wants to use the external confirmation, what is the basic objective of the auditor in that scenario? Quickly.
So, an auditor design and perform such a procedure to obtain the relevant and reliable audit evidence.
Okay. Okay. Anyone else with something more to add?
So can you repeat the question?
So when auditor decides to use the external confirmation, so what is the auditor's objective in that particular scenario? What should auditor, like the main overall objective is there while using the external confirmation as a process? What auditor should, the objective it should achieve? Like why, if he is sending the external confirmation, what objective he should achieve?
That the balances represent a true and fair position, and that the reporting will also be correct. Will represent a true and fair view.
Okay, will represent in true and fair view. Hmm. Anything else? Anyone wants to add something more to this? What is the objective? Why we want to share? Are you somewhat similar to your answer? Something similar is there. But again, if auditor is using external confirmation, what he wants to achieve at the end by sending external confirmation?
So, to obtain relevant and reliable audit evidence by way of using the external confirmation, he will design and perform.
Absolutely, yes. Now that's the point here. We are talking about to obtain relevant and the reliable audit evidence. That is the main objective of the auditor. So whatever we are doing for the external confirmation, the end target is that by the end we should have the relevant and the reliable audit evidence. That is the main objective. Okay. So to get relevant and reliable audit evidence. Now, when I talk about relevant audit evidence, and okay, we understood already the part relevant in prior case also. But how we can make more reliable? How we can make the evidence that is obtained from the external confirmation process more reliable? What auditor should do to make it more reliable? What auditor should do to make it more reliable? Come on, guys.
So, the auditor should deciding the information that what information to be confirmed, and he gets to select that appropriate confirming party,
Hmm.
and he has to design the confirmation request. and the type of confirmation, to whom it is to be communicated.
Independent audit evidence.
Independent audit evidence, okay, but how he can make it more reliable? If auditor wants to make the audit evidence more reliable, what he should do as per SA 505?
Yeah, he has to get that confirming party, third party confirmation.
Third party confirmation, okay. But how to make it more reliable? What he should do to make it more reliable? Again, my question remains the same. If I want to make the external confirmation process more reliable, what as an auditor should I do?
So the auditor should get that evidence directly from the third party.
Auditor
Uh,
should get
Positive confirmation, having a control over the
yes, very
confirmation
good.
process.
Yes, absolutely correct. Having the control. See, when you are doing or conducting the external confirmation process, at that point in time, the important part is the control over the process. Okay, then only you can make that particular process, an outcome of that process, more reliable. Are you getting the point? So, positive confirmation on all those things, yes, but the first and foremost important point here is to control, to have the control over the external confirmation process. And how will you have the control?
Yeah, by of deciding the information to be confirmed, and by of selecting the appropriate confirming party and designing the confirmation request and sending follow up and verifying the resource from where he received the confirmation.
Okay, okay, yes, very good, absolutely correct. Yes. So auditor can have a control deciding the information which is required to be confirmed, selecting the appropriate confirming party, designing the confirmation request, how he should design positive, negative, what are the ways, the content request, and sending a follow up or getting the response directly. So this is how he can have a control on the external confirmation process. Clear with this? Any questions, anyone till now? That was SA 505 external confirmation process. Fine. Now, another standard that we discussed was something with respect to the opening balances. Now, what is the objective of the auditor when it comes to the opening balances with respect to the initial audit engagement? What is the objective of the auditor when it comes to the opening balances for the initial audit engagement?
To find out whether the opening balances contain misstatement.
Okay, that is half of the
And,
answer.
yes, sir. And to check the accounting policies which were followed in the last year have been consistently followed
Fine.
in the current.
Still something missing in the answer.
So, see, to obtain the sufficient appropriate audit evidence, whether opening balance contains material misstatement that materially affect the current period financial statement.
That is the point that was missing.
And
Misstatement in the opening balance that is impacting my current period financial statement. Otherwise, why should I worry about opening misstatement? If your current period financial statements are not being impacted. So the objective of the auditor should be to understand and to obtain sufficient and appropriate audit evidence whether there is any misstatement in the opening balance that is materially affecting the current period's financial statement, number one. Number two, appropriate accounting policies which are reflected in the opening balances. have been consistently applied, and if not, then whether the change has been appropriately dealt with as per the applicable financial reporting framework. Now, when I talk about change, it is kind of a scenario where you are either migrating from the AS to the Ind AS or something similar, where you are adopting a new accounting policy. So the change should be dealt in accordance with the applicable financial reporting framework. Okay. So one was the opening balances contain misstatement affecting current period. Second, accounting policies compared to the last year, but change, if there's a change, then how the change has been dealt with. Okay, there is a objective of the auditor when it comes to the opening balances. Fine. Now, my last question for the revision part is that do you need to perform separate procedures to verify the opening balances every time?
Sir, it's not needed. When we are doing the current year audit procedure, we have to include that audit procedure in such a way that including the opening balance, whether it is a correct or not, that we have to verify it. Say example, if you are getting the closing balance of the current year, we can ask them to provide the opening balance of that existing year in such a way that when we can get the confirmation.
Yes.
The procedure what we are following for the current year, it should include in such a way that to get that opening balance also is correct.
Yes. Yes. So not necessary that we draft a procedure every time for the opening balance.
But if he suspects that there are some misstatements or then he will have to carry out separate procedures to obtain sufficient and appropriate audit evidence.
Yes. Yes. Absolutely. Yep. Correct, Sanjay. So when he has a suspect, when he has a doubt, you need to resolve the doubt by performing additional audit procedures. If there is an issue on the reliability of the audit, reliability on either this any of the area, even it's external confirmation, or if you have a doubt with respect to any of the opening balances that you think, okay, I don't have the sufficient and appropriate audit evidence, you are required to perform additional procedures. That is for sure. Okay. So that was what we discussed on the SA 505 and 510 in the last session. Any doubt with respect to SA 505, 510 from the previous session? Any doubt? No? Should we proceed ahead? Okay, let's proceed ahead then. The next thing that I want to discuss, and very important topic for the today, is SA 530, audit sampling. Now, when I talk about audit sampling, and when you heard the term sampling, what do you think that means? What sampling is? Like, if I ask you, can anyone explain me what sampling is? Like, what do you mean by sampling?
Means taking a particular item which is representative of the universe, from the universe, which is representing the universe, and it is selected in such a manner that it gives the accurate picture when the tests are performed.
Absolutely correct. Very good. Yes. So when I talk about the term sampling, okay, audit sampling. Now, this is basically application of the audit procedures to a particular item within the entire population. Now, when I select a sample from the entire population, I need to make sure that they are from the same homogeneous population. They have a similar chance of selection. Now, it could be similar, it could be based on the type of sampling method, but again, they should have the chance of selection in order to provide a reasonable basis that I have concluded on a particular testing. Okay. And we will understand this with an example, with a very interesting example. Then only we will be able to get the idea that how sampling outcome is basically, considered, and what you do when the sampling outcome is there with you. Okay, so let me go to the just a minute, notes part. Yeah. Okay, so we will understand with an example. Let's say you tested marketing expense. We are talking about marketing and selling expense. Now, marketing and selling expense is a very big head. It may contain different subheads. For example, you have marketing expense of, let's say, I will write population. Let's say 50 lakhs. You have distributor commission. Let's say 25 lakhs. Then you have a, seller. Sometimes, you provide free samples, seller free samples, or you do some expenditure on the marketing behind the sellers and distributors. So you can say seller marketing kind of thing, where you are providing them the material for the marketing, let's say 5 lakh rupees. Okay, so these are the three heads of the expenditures that is there in the marketing and selling expense. Fine. Now you tested samples out of this. How we selected the sample and what was the sample size, we'll discuss later on. But let's say you selected some samples and you tested those samples. So what was the sample amount that was tested? Let's say 5 lakh rupees over here. Let's say 15 lakh rupees over here. And you tested the full 5 lakh rupees over here. Because it was only, I will provide here the additional detail, it is only 2 invoices. Only. Like there were 2 invoices, you tested both. 5 lakh, 5 lakh. Now, while testing, you identify the misstatement. You identified misstatement. Okay. The misstatement amount in this particular scenario, let's say was, you tested 5 lakhs. So let's say hypothetical example, 1 lakh rupee is a misstatement amount. In this scenario, you identified only 50,000 as a misstatement. And here you identified none. So this is how the misstatement was identified. Now the total misstatement which was identified from total of the testings was rupees 1.5 lakh. Okay. This is the total misstatement identified. Now the question comes is how you will interpret this. So how you will interpret this in this particular scenario? Tell me. Anyone? Am I audible?
Yes.
Yeah. Okay. Yeah. Tell me. So if you want to evaluate this 1.5 lakh, how will you evaluate?
We will evaluate it at the overall materiality level, performance materiality level, which we might have fixed at the start of the audit.
Okay. Overall performance materiality level. I'll give you a hypothetical example. I will include the performance materiality level for you guys. Let's say overall materiality is 2 crores. Performance materiality, let's say, is I'll reduce the materiality level a bit for this particular scenario. So let's say overall materiality 1 crore and performance materiality is 10 lakh rupees. Very good, Ayush. So how now you will interpret in this particular scenario? You have the materiality, you have the total misstatement. Now tell me what is the your interpretation. So apply SA 450, evaluate the misstatement. How will you evaluate?
In the first case, in marketing expenses, we drew the sample of 10% out of population of 50 lakhs.
Mhm.
And the misstatement comes to 2% of the total population. In distribution commission, we drew 60% of the samples, and 2% is the misstatement there also. So,
Okay. But my question remains still the same. How you are going to say whether this is material, not material? What you are going to comment on this finally?
Sir, in this one, the third case that the 5 lakhs he fully tested, not identified, and the second one is 15 lakhs. From I'm going from bottom to top, and the 15 lakhs he tested 15. That is a 50,000 that which means 50,000 is a misstatement. So that is clearly identified. On the first one, the marketing expenses, he identified the out of 5 lakh, he identified 1 lakh, which means
Mhm.
the remaining 50 lakhs, there is a possibilities. We have to estimate what is the amount of misstatement will be there in the marketing expenses out of 45 lakhs.
So what that would be if you do a calculation? So what that answer come to you? Anyone? Like if you do this calculation, the way you're saying, what will be the answer in that scenario? See, this is where we need to understand. Very good, Ayush. Yes. So
Sir,
I'll come.
sir, it is coming 10 lakh. Then we have the performance materiality fixed as a 10 lakhs rupees. So it is come, there is a 10 lakh rupees. So we have to strengthen that audit procedure for the remaining items as well.
So you are saying it will become material misstatement.
Because the thing is that out of 5 lakhs, if 1 lakh is the material misstatement, then remaining 45 lakhs is there. In that, if we are calculating is around 10 lakhs is there. So right away, we cannot assume that there is a material misstatement. However, we have to strengthen our process to put the samples for further, and we have to test that.
It is 20%.
Yes. See
So
now, yeah.
yes,
Yes, yes. Go ahead.
no, sir. It is so it is more than the materiality fixed. So it is relevant and needs to be further probed,
Okay.
and
Okay.
further evidence needs to be obtained.
Okay. Understood. Yes, absolutely correct. Now I'll tell you. See, this is the place where we need to understand the sampling. Okay, this is the place where we need to understand the objective of the auditor. And with an example, I will explain you how and why we are using the sampling and what is the purpose of sampling over here. See, when it comes to the sampling, the thing is, what was the objective of the auditor when we discussed the sampling? We discussed that in case of a sampling, audit sampling, if you see the definition of audit sampling, that says that it is the application of the audit procedure to the lesser than 100% of the items within the population. In our case, we applied a particular testing to a lesser than 100. Out of 50 lakhs, we tested 5 lakh rupees. Of the audit relevance such that all the sampling units have a chance of selection, fine, we have that. In order to provide auditor with a reasonable basis on which draw conclusions about the entire population. So now what we need to do is we need to draw conclusions from this particular testing or the outcome of the testing on the entire population. So if I have identified misstatement of 1 lakh from 5 lakh, now the question comes is, should I extrapolate and get a outcome on the 50 lakhs? And the answer is yes, you are required to extrapolate, but there are scenarios. Now, this is known as nothing but the projection of the misstatement. Okay. So we have to project the misstatement found in the sample to the population. We can do that and we are required to do that. But there are certain scenarios where projection is not appropriate. We'll understand in some time. But in this scenario, yes, projection will be required. Okay. So this is nothing but we need to do a projection, and with the effect of the projection, like if you have 1 lakh in the 5 lakh, you will have rupees 10 lakh in 50 lakh. Similarly, if you have 50,000 in 15 lakh, 50,000 in 15 lakh, how much you will have in 25 lakhs? So if I do a cross calculation, yeah, just a minute, let me do a cross calculation quickly.
Yeah, it's come 0.1 to 10 percentage.
No, in amount, if it comes like it is 83,333 around, like we will consider
Yes, sir.
83,000 approximately.
83,000.
83,000. Okay. And here it is none. So again, fine. So total of my misstatement comes to 10 lakh 83,000. Okay. Which is beyond more than my performance materiality. So it will become material misstatement. It will become a material misstatement. Okay. Now, usually in this kind of scenario, what we do is we don't generally, close our testing at this point in time, because the misstatement here is in the nature of the projection. It is not the actual misstatement, it's the projected misstatement. Are you getting the point? This misstatement is a projected misstatement, not the actual misstatement. So in this general scenario, what we do is we expand our testing to understand that whether this projected misstatement is correct or not. We do a reprojection based on the retesting. And if we still get the same output, yes, then the projection is correct. Okay. So you need to, yeah.
But the thing is that when we are doing the retesting, there is no actual misstatement. Then the time is wasted, right?
No. In that case, your projection will change. If you do a retesting, your misstatement level goes down. Let's say, for example, you tested next 5 lakhs, and after testing next 5 lakhs, you did not identify a single misstatement. Means now you have a misstatement of 1 lakh in front of 10 lakh. That means your projection altered a lot.
Yeah, will get reduced.
Will get reduced. Now it will not remain material enough. Okay, that's why we need to do retesting. We need to increase the sample size whenever we identify a misstatement. See, when we determine the sample size, there are certain factors that we consider. When we when we take out a particular sample out of the population, there are few things that we need to consider while calculating the sample size. It's a mathematical formula. Okay. And in that case, there is one term called tolerable misstatement. What is a tolerable misstatement? Can anyone tell me what is a tolerable misstatement?
Sir, while doing that auditor, see, we have that materiality, overall materiality value, and the performance materiality value also will be there, the lower to the overall materiality. In addition to that, the auditor will set some monetary amount set by the auditor. In respect of auditor, seeks to that below that level, the thing is that the misstatement will not be there by the actual misstatement in that particular population, which means it can be the monetary limit which can be below the performance material level, or at the same material performance material level also he can fix, and accordingly he can do perform that audit.
Yes, yes. So when I talk about, absolutely. So when I talk about tolerable misstatement, okay, tolerable misstatement is kind of a level that I expect the misstatement will not exceed beyond this. This is something I'm tolerating the misstatement in this particular whole sampling. And why it is required reason, because the moment I calculate my sample at that point in time, remember in mathematical formulas, sometimes you will look for margin of error. So if you see sampling formulas in mathematics or in statistics, there's a term called margin of error. The similar term for the margin of error is a tolerable misstatement in the audit. So while calculating a particular sample size, I need to figure it out what is the margin of error for me. Then only I can get proper amount of sample. Okay, so that's where the margin of error post comes. Now, if your actual misstatement goes beyond the margin of error, your sample size changes automatically. Means your margin of error or your tolerable misstatement was not accurate, and accordingly your sample size will change. Clear? Any doubt? Any doubt till now? Okay, so now by taking this particular example, okay, what we will do is we understood that extrapolation, or this is known as the projection of misstatement, is done in certain cases. Projection of misstatement is done in certain cases, and based on the projection of misstatement, we get the projected misstatement, which we can, on the basis of which we can evaluate. And if I talk about the formula to derive the sample size, usually there are complex formulas also, but I'll give you a simplified version. So usually sample size is how it is derived is, you take a population, you multiply with a confidence factor, and you divide it by the tolerable misstatement. This is how you get the sample size. Population is kind of the actual number of items in that, tolerable misstatement, and then confidence factor. Sometimes people have a complex formulas, like there are multiple methods to calculate sample size. This is a very standard one, very standard, very basic one, but there are more complex than this. Okay, so we consider the confidence factor and the tolerable misstatement to get the sample size. Now, if your tolerable misstatement, that is something you are expecting, is wrong, you got more misstatement, then you need to change this figure. The moment you change this figure, your entire calculation will change. Okay, this is very simplified version I'm just discussing over here. Okay, now this was projection plus tolerable misstatement. We understood key terms over here. Now the second thing we need to understand, when we should not project. Okay, I'll give you some examples and tell me whether you will project or not. Okay, so type of testing. We have a type of testing, we have population in this table, we have sample size, we have misstatement. Okay, so we have these things. Type of testing: invoice, verification. Okay, I'll write area also. so that you can understand from which area it belongs, the testing. Okay. Invoice verification, let's say the population is 5 lakhs, sample size was, let's say, 1 lakh. Okay. Misstatement, let's say only 10,000. Okay. And area was legal expense. Now I'm writing something along with this, and then you tell me. This is wrong classification error. So there was a wrong classification of the expense in this scenario. Okay. Next area, again, invoice verification. Population, let's say 25 lakhs. Tested, let's say 5 lakhs. Same, this wrong classification was like in this, instead of legal, what they did is they classified this as a salary, or not salary, basically, let's say marketing expense. So instead of wrong classification, instead of putting in the legal, they classified this into the marketing. So you have the total misstatement of 50,000, out of which rupees 10,000 is wrong classification. Okay, this one, similar wrong classification. Fine. Now, third testing. Okay, so the third testing is we tested inventory count control. Okay, so the total inventory was, let's say, 10 crores. While counting by the management, the control, so management considered, let's say, the samples for their testing. Management considered the entire population in their testing. But when we tested the control, we pick up some samples. We picked some samples for the testing of control, and we picked a sample which almost ranged to 2 crores. Out of which we identified one deviation wherein there was a difference in the inventory which was not recorded, amounting to, let's say, 1 lakh rupee. Okay, so difference not recorded on timely basis. Okay, now this is inventory. Now tell me, how will you project these? Simple. You need to project in these scenarios. Tell me how you will do it. Anyone? How will you project in this type of scenario? Yeah.
Can you please clarify that area? That first one is legal expense, second one is marketing expense. Whether legal was wrongly classified, or I mean marketing.
So basically, the correct classification was legal. So this was the correct classification.
Yes, and it was wrongly classified as
marketing.
Okay, and in the second one, sir?
In the second one, there was total 50,000 of misstatement, out of which 10,000 is the wrong classification of marketing, which was supposed to be legal. Okay, so there is one misstatement which was that legal was classified as a marketing. Here 10,000 legal was legal expense was there. That was classified as a marketing expense. So you are seeing 10,000 misstatement at both places. Similar misstatement.
So this will require further investigation, because it will impact, it relates to legal charges, which may impact a pending court case, or we will auditor would require to obtain evidence regarding the illegal because this was wrongly classified. It may be done to purposely hide out the fact of an ongoing litigation, which may have an impact on the uh, going concern of the company as well. I mean, depending on the case and so this will require further investigation, sir. Because not just the amount, but the area which is involved.
Okay.
Sir, could you please see, actually the first case is the invoice verification, second case is the invoice verification, third case is the inventory count. This is a control. You are checking the control, right?
Third one is a control. Yes, control testing.
Okay, fine. Sir, see, first there are 3 line items given in this question. On the first line items, it talks about the invoice verification. This amount, there is a 10,000 is wrongly classified. To the extent of 1 lakh, 10,000 divided by 1 lakh, if you put 10,000 is there, then the 10% will come on the 5 lakh, will come to 50,000, there is a misstatement. We can say that. Accordingly, we can strengthen our further audit procedure, we can do that. On the invoice second line item, it's a 50,000, there is a misclassification is there. 50,000 divided by, again that 5 lakh, it will come to 10%. Then the 25,000, here what is the tolerance limit? The misstatement we fixed, that is not clearly given. So we assume that the tolerance limit may be that 50,000 in this case. Say the second line item is talk about the 10% is coming 2.5 lakhs. If it is a tolerant limit is the 50,000, definitely we will further extend that verification process, we can do that. With respect to third line item, inventory count, control, the first 2 line item is to talk about the test of details. The third line item is talk about the test of controls. When we do the test of control, with respect to, this is respect to the internal control procedure, which means this misstatement we found is 1 lakh. Here we cannot estimate or predict the amount based on which the control is failed. No, it's not like that. This is not like the test of details. The test of controls, which means this level is failed. That's all. We cannot predict and do that.
Absolutely correct. See, now I'll tell you something more. Whenever there is a projection of the misstatement, it is not only the amount which is being considered. It is the qualitative aspects which are being considered when you project a misstatement. Now, when I talk about invoice verification, this one, okay, I have a wrong classification. If I project this 10,000 here also, if I project this 10,000 in here also, it is the wrong projection because I am taking single misstatement. I am projecting at both places. Okay, so if I project this 10 here, 10 here, okay, what will happen is I am projecting single misstatement at both places. That is incorrect. Number 2, okay, number 2 is with respect to the controls part. Remember one thing, there is no projection in the control because of the type of misstatement. In control, you do not check on the amount, you check on the performance of the control. Okay, now here, if you see, the kind of misstatement is difference not recorded on timely basis. Although you have an amount, but it is on the timing, nature part. If it is not recorded on the timely basis, the question comes is, how will you project this? Is it the control? Control was management will perform the count, differences will be there, and they will record the differences on a timely basis. Now management failed to perform the count. There is no projection in that. The control, now remember, like we have discussed in the past also, but again, if you see, when we do a control testing, okay, the outcome is not like, okay, out of, let's say for example, okay, I will provide you some more context onto that point. Let's say there is a control, inventory count control. So management performs every month the inventory count. So total you have a 12 counts as population. You took, let's say, 3 counts for sample testing. Misstatement, 1 count failed. 1 count failed. Now, like this is, I'm taking in the number of counts. I'm not taking out any of the amount. There is a misstatement, 1 count failed, where management did not adhere to, let's say, proper inventory count instructions. So proper count instructions were not followed. Failed on qualitative aspects. Now the question comes is, how will you project, or how will you evaluate this kind of misstatement or deviations very quickly? So what you will do, like what will be the outcome of this? Can anyone tell me, if there is a 1 count failed on the inventory count control, what you will conclude with that on this control? Will you say that, okay, out of 3, 1 failed, so out of 12, 4 failed?
So it's a significant deviation.
Significant deviation, okay. What else?
We will say the level of confidence. See, what is the percentage, which means the tolerance rate. Which rate of deviation? We have to fix the tolerance rate of the deviation.
Okay. Okay. So let's say that the tolerance rate of deviation is 0 in this scenario. And I'll tell you why I'm saying 0. So the tolerance rate of deviation is 0. That means confidence factor is 100.
100%. Okay.
Yeah.
Level of confidence is 100%.
100. So now
Okay.
tell me, what will you say in this scenario?
Maybe the control change management, whatever there in that control system, whether they're properly followed or not, that is a questionable now.
Sorry,
Now
can
we
you
will
repeat?
apply
Your
test
voice is
of
breaking.
details. So now we will apply test of details in more detail.
Sir,
Test of
sir, am I audible, sir?
Yes, you are audible now.
Okay, fine. See, actually, here is, we are talking about the test of control. In this case, the level of confidence is 100%, but we identified there is a 1 count, there is a mistake. In this case, which means which means that 1% where there is a problem that we need to identify and fix it.
Yes. See, I understood, but what will be the outcome on the control? Now, if this control is there where 1 count is failed, should I say this control has 4 failed count, projected 4 counts, or I would still say 1 count only? What will be the outcome on the control, I'm asking?
So outcome of
alternate audit procedures, separate story.
Sir, outcome of the control is only one only. We cannot project based on this one. How many is there? No, nothing like that. It is a missed. Missed means it's a missed count. This is a only one. Which count? Which part is mistake? Then we have to go and modify and do the make a checker and fix the problem.
Now I'll tell you one thing over here. Here, in this particular scenario, as you said, it is absolutely correct. I will not project. We saw that we do not project the qualitative aspects or in the test of controls. The reason, because even with my 1 count failed, the operating effectiveness is not present. Understand that I am with a one failed count, even with one failed count, the operating effectiveness is missing big time. I will not say that the control was operating effectively. I don't need 5 counts or 4 counts to call it operating effectiveness is not there. With a one count, yes. Even in this in sample in control testing, one failure can result in the control entire control failure that you cannot rely. Reliance cannot be based because OE is not present because you have a one failed count in your testing. So the projections cannot be done on the control testing. But apart from that, you need to think of the nature of the materiality, nature of the misstatement, sorry, and based on that, you need to do the projections. Clear?
Yes, sir. Then we can go about what is the whether the internal control is effective, whether that they properly designed or not. Where all this questionable. Then they would revisit the entire process. They would fix it.
Okay, great. Now, another question I have with an example. We will understand with example because this particular standard is most, understood in the most best way through examples only. So I will have now data's listing for you guys. Okay, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, name, amount, okay, SR, name, amount. So we will create a fake data listing over here for the purpose of confirmation process, and we will do a sampling out of it. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, and Z. Okay. Now, with an amount, let's say you have 1 lakh, 3 lakh, 4 lakh, 10 lakh, again 1 lakh, 2 lakh, 3 lakh, 14 lakh, 13 lakh, 2 lakhs, 10 lakhs, 1 lakh, 1 lakh. I'm just putting a random amounts. 20 lakh, 10 lakh, 1 lakh, 3 lakh, 14 lakh, 10 lakh, 1 lakh, 2 lakh, 3 lakh, 1 lakh, 1 lakh, 2 lakh, and 2 lakh. This is the data listing you have. Okay. So now your role is to select the samples out of it. Your role is to select the samples out of this 26 data for the confirmation. 26 data out of the 26 data, select the samples for me. And I'll give you, I need, let's say, forget about the sampling formula. Don't apply any sampling formula. I need 10 samples. Not 10 samples, let's reduce the size bit. I need 7 samples. Select 7 samples. Which one you select? You have information in front of you. We need 7 samples. Select 7 samples. And tell me the basis of the selection. Come on, guys. Select the sample. 7 samples. Out of this, tell me the basis of selection.
So the purpose is to get the external confirmation, right?
Yes.
Sir, okay. Sir, my thing is that the purpose of testing is very clear, but
Mhm.
what about the risk assessment? Whether the risk assessment is low or high, and also whether we need to get the evidence of test of controls. What is the reliance out of the test of control? We need to check on that
See,
first.
that is something you would require to determine how much sample you need to test. I gave you 7 samples.
See, seven sample, okay, seven sample you selected. On what basis you have selected? That I need to understand, right?
So calculation part, which requires your evaluation of the risk of material misstatement, which requires evaluation of margin of error, which requires evaluation of performance materiality, everything done.
Okay.
You have a final outcome of 7 samples that you need to select from this.
Okay, which means you already tested that. You mentioned the purpose also. You risk also you assessed. What is the
Yeah.
level of risk on this, sir? Whether it's low or high?
Let's say you have a medium risk of
Medium.
material misstatement.
And you tested that the TOC as well, and you have reliance answer as well, and the materiality in the performance also you fixed it. What is the level of performance materiality, sir? In this case, performance material amount.
Performance materiality in this particular case, assume it is. I'll also give you. Wait.
Sir, why I am asking this? Whenever there is a question like this, definitely I will check on the what is the purpose of that testing, and also I will verify whether the risk assessed is properly, what is the level of risk, and also evidence of the test of control and the reliance of it, and
See,
finally what is the performance. Then accordingly only we can go for the sampling.
okay, so this is the performance materiality file. Like risk of material misstatement is medium after considering the control testing. Now tell me the samples. How will you select and what samples you will select? Performance materiality file like risk of material misstatement medium.
Sir, okay, if everything is okay, then it's based on the auditor judgment. He can, we have a lot of sampling methods also, random sampling selection, like we have the systematic selection, and the blocking is there, block selection is there. We can, which
How
type of,
what you will apply over here in this particular scenario? Anyone? How you will select the samples? See, think of practical scenario. You are on the ground doing the audit. You have the sample and population in front of you.
Based on the amount.
Amount based. Okay. So can you give some example?
Like we'll select D,
D1. Okay. Great. D,
H,
H. Yes.
I,
Okay. I.
K,
Okay. K.
then here O, N, O,
Okay. L is just 1 lakh rupees. Okay.
N, N, N,
Okay. My
N,
mistake. Yeah.
N, 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 O,
N O. Yes. Very good.
R, R, and S.
Yes. Absolutely correct. Okay. Fine. So here you selected based on the top value. Fine. Now I'll tell you a problem in this approach. Here you selected amounts which were of high value item. Okay. High value item means, remember, our population and the sample. Now, when we do a sampling, when we come,
It will not be representative of the whole.
sir.
What I have selected will not be representative of the whole. So we will select some lower end also.
Sir, actually, what I will do, sir, I will put the ascending descending that the performance materiality is fixed 5 lakhs. Above 5 lakh, what is the amount with there? Then below 5 lakh, what are the line item is there? Then I will segregate as a block. That is a one block, this is another block. Accordingly, I will see how many items are there in the top line above 5 lakhs. And below 5 lakhs also, I will choose the 7 items accordingly. Above things, I will go for 5 item. Below, I will go for 2 line items. Totally 7. Based on
okay,
my judgment, the professional significant, the based on the professional judgment.
okay. So in this scenario, we have a concept called sampling. There are multiple type of samplings, correct? But this is statistical sampling and other type of samplings. Now, what is statistical sampling? When I talk about this type of sampling, over there, you use either a probability theory to get the sample results, like applying weightage or something like that. Okay, use of probability theory, or you use a random selection. If either of the scenario is not there, then it will not be called as a statistical sampling. It will be called a non-statistical sampling. Okay, so in this particular scenario, what we are doing is we are not applying any probability theory. We are directly using, you can say, judgmental basis, including the only amount, not a random sampling. So if you use a random sampling based on the random table, random numbers, fine, it could be statistical. If you use a sampling method where you are using a probability based system, fine, it will again be a scenario will be called a statistical sampling. But in this kind of scenario, it is not statistical. It is not kind of, what you can say, you are applying any probability. Okay, so these are kind of scenarios where you can say either judgmental, where you are applying your judgment and you are taking high value amounts. Okay, or you can say this is non-statistical sampling method. So these methods, now what impact they have on the population, on the sample? See, now when I talk about sampling method, it directly impacts the level of the audit evidence you are getting. Why? Because my sample should represent the entire population, number one. Number two, the sampling unit in the population should have a chance of selection. Now, if I use a sampling method where they don't have a chance of selection, like for example, 1 lakh rupee, 1 lakh rupee, I know for a sure that they don't have any chance of selection because my sampling method is of such that I will pick up top 5, top 10. Means in your population, rest of the population doesn't have a chance of selection. As a result, it may not demonstrate a appropriate sampling method for that particular scenario. It will not be called a proper sampling. You are not doing a proper sampling. You are selecting some of the items judgmental basis, okay, to draw conclusion on the entire population. No, you cannot say that you will be able to draw conclusion on the basis of this on entire population, because it was not appropriate sampling method. Are you getting the point?
Yes, sir. There should be a chance for getting each line item to picked up.
Yes. So each line item should have a chance of getting selected.
Fair chance, fair chance.
So this is the way we need to think of that. Okay, if we are applying these kind of methods, then what will be the outcome? So again, there are things that we need to consider. For example, we can apply value weights to each of the scenario. Okay, and based on that, we could have some smaller value items also, and accordingly we can do a sample selection plus include something which is random also in this. A multiple combination can be used. I'm not saying you shouldn't use high value items as a sampling, but you can use multiple combinations of the sampling method to get more effective samples. But selecting top 5, top 10 might not be correct every time, will not give you, and will result in a scenario where you don't have a chance of the selection for the entire population.
Sir, in this case, we can put the block of items. We can select above 5 lakh the one block and below 5 lakh 1 lakh, and in that we can select some random items.
Yes, Like that can be done. So combinations can be done with respect to various factors, like how you are determining the samples, like what is the purpose, first of all, for the sample selection, whether you should use a non-statistical method or a, one which is appropriate in this scenario, like which method is appropriate for the sample selection. Sometimes it is more important to cover the amount rather than the numbers. So at that point in time, judgmental may be relevant, may be useful, but you need to think from the testing point of view that what type of testing you are doing, what is the objective of your testing, and then how you should select the sample. See, in the data's confirmation, it is a balance. I may, I may still say that with a combination, this is good approach because it gives me a good comfort on the material amount of the data with respect to the confirmation. Now, let's say, for example, I have a data, let's say 27 number, let's say AB data, which is a balance of 3 crores. It's a related party. And whosoever, let's say this entity has a higher related parties. Now, this is a related party, this is a related party, this is a related party, this is a related party. If this is a scenario where my majority of the high value data are the related party, I may not go with this method. So always, like, selection on the basis of amount is not always correct, because as an auditor, we need to think of a scenario, what method would be appropriate for what testing, what is my goal of testing at the end, and is this method appropriate for that. So when I'm designing an audit, when I'm using sampling methodology and designing an audit sample, I am required to consider the purpose of the audit procedure, the characteristics of the population from which I will be drawing the sample. Then only I can say, okay, this is the appropriate way. Clear?
Yes, sir.
Yes,
Okay.
sir.
Now,
Means if there are related party, then we will apply non-statistical approach. Because if by
see,
statistical approach, we will every item has equal chance.
in that case, there is another concept called stratification. Okay, stratified sampling. Now, what you do in the stratified sampling is you bifurcate into groups. One group will be a related party group, one group will be a non-related party group. In the non-related party groups, you may apply a random sampling and send out the confirmation request. For the related party group, you may apply something like, see, again, when I talk about confirmation or from the related party, do you think external confirmation is appropriate and the good way to get the comfort over the balance? Wholly on subsidiary, or
No.
you can say, answer is no. At that point in time, I need to think what is the appropriate testing procedure, whether the confirmation is still the same or confirmation is still the good procedure. If not, then what is the procedure and what would be the good sample methodology for that? Are you getting the point?
Yes, sir. Yes, sir.
Okay. Now, taking this particular example, okay, this example only, I'll remove the reference to the related party as of now. Assume none of them is a related party. None of them is a related party. Okay. Now, let's assume, hypothetically, somehow we went and selected these samples. So these are the samples: 11, 9, 8, 4, 14, 15, 18, 19. These are the samples which are selected. Later on, we identified that R, which is having 14 lakhs over here, we cannot send confirmation. Confirmation not possible because of litigation. So there's a litigation going on. Okay, R is saying no, our balance that we need to pay is nothing. There is some contract going on. on a contract there is a litigation, but we have booked 14 lakh rupees in the name of R. So there is an issue with respect to the R and you cannot send the confirmation. How it will impact your sampling? What you will do? Will you call this as a misstatement?
Sir, in this case, that we can remove that item from the sample, then we can select the another items. We can do the separate treatment for that items.
Okay.
We will apply separate audit procedure for that item, such as we will check subsequent cash receipts or other documentation related to that item and choose another item in spite of that item.
Yeah, that for that we will do the further audit procedure. Anyway, that is similar with the prior month or current month, what is the sales transaction, all these things we will check whether there is a receipt is there or that we will do. But when there is a specific that the restriction is there, that the confirmation legal litigation, which means that see there are other in this population we can give the chance to other items. That is what I'm saying.
Okay. Anyone else with some other answer, something different? Some other answers? Okay, fine. Now, let me change a bit. Okay, I'll provide you some more information with one more sample. Let's say sample I was there. Okay, now here everything like, in case of R, you could not send this confirmation because there is a litigation going on. In case of I, management has refused for confirmation without any reason.
Okay, if the management is refusing, then this is a limitation of scope. Definitely, we will evaluate. We will do the further audit procedure. If unable to get, there is a chance for fraud risk.
Doubt on
Very
the
good.
integrity of the management.
Very good. But will you select another sample in place of this? The question is, will you select
No,
another sample?
no, because see, they are right only, but management restriction, they are not allowing us to send, which means the limitation. This is a good sample only. But the thing is that since they provide the restriction, there is a limitation. We have to evaluate, we will try to do the further audit procedure, wherein also we are unable to get some information. Definitely we need to discuss with the charge accountants as well. Then there is a chance for fraud risk factor. We have to involve SA 240 as well.
Very good. See, so the purpose of this example is to explain you two concepts. Number one is the concept where you cannot apply the procedures. Okay, if there is a sample on which the audit procedures are not applicable, at that point in time, you will select another particular sample. So if you say this particular sample is there, I cannot apply, I'm unable to apply, that's a misstatement. I am unable to apply because of the management. But if there is an audit sample where the procedures are not applicable, okay, in that scenario, it will call for a replacement. Now here, confirmation is not applicable because of the litigation. Okay, so I would say not applicable confirmation because of the litigation, which I have the documents, everything. So I will say not applicable. But here, I will say not able to apply because of management. Not applicable and not able to apply. Both are different. If it is not applicable, it will call for a replacement. Here, you need to find a replacement of R. Okay, but here it is directly a misstatement. Are you getting the point? So if I conclude that I'm not able to apply or not applicable, not applicable, the audit, I'm talking about in respect of the audit procedures. Audit procedures not applicable on sample that would result in replacement. If I say audit procedures unable to apply on sample, this will not call a replacement, but this will result into misstatement. Okay. This will result into the misstatement. Then again, the cycle of the evaluation of the misstatement will start. Clear? Any doubt? Any doubt? Okay. If no doubts, then I want to take up one more concept which is very important with this scenario. Can anyone tell me what is sampling risk? What is sampling risk?
Error in selecting a sample which is not representative, which is uh, obtained as a result of a bias,
Okay.
and which has not been given a proper chance of uh, being selected. I mean,
Okay.
Sir, sampling risk, the auditor is selected, as example, 30 samples. Out of 30 samples he tested, the sampling risk is, say, example, the 1000 samples are there. Remaining the 730 sample, if he tested, then what could be the error? That is a difference between this tested sample, not tested sample. That is a sampling risk.
Okay. See, I'll tell you. Sampling risk basically is of two types. One is a false negative, one is a false positive. When I talk about sampling risk means that the conclusion that you have reached about the population is not correct. Means whatever you have tested, the sample, now you cannot extrapolate, or if you'll extrapolate, it will give you a wrong result about the population. That is a sampling risk. So risk of having a wrong conclusion on the population based on the sample. That is the biggest risk we have in the sample testing. That whatever we are seeing, remember in the starting example, we discussed about a scenario where 5 lakhs was identified as a misstatement. 1 lakh was identified as a misstatement and 5 lakh was a sample. So we reach out a projection of 10 lakhs. Then we discuss what if we test more 5 lakhs and we did not identify any misstatement. Then what will happen is out of 10 lakh, 1 lakh will become misstatement. My projection ratio will change. Yes or no? Now, if I would have not tested additional 5 lakhs, at that point in time, my projection was wrong. Are you getting the point? Okay, so let me explain you with example. There was a population of rupees 25 lakhs. Samples. Okay, this is round one testing. Testing round. Round one, population 25, sample size 5 lakh. My misstatement was 1 lakh rupee. So the projected misstatement will be 5 times 5 lakh rupees. Okay. Now this is the round one testing. Now projected misstatement 5 lakh. And let's say, hypothetical example, my performance materiality level in this scenario is also 5 lakhs. So it will become material misstatement, yes or no?
We cannot say immediately the material misstatement. We have to test it, then only we can conclude that material misstatement.
Let's say if I go with this, if I do not test further, then material misstatement. But with that, if I don't go and if I don't do further testing, I end up with a thing called sampling risk. And I'll explain with a round two. So let's say there's a round two, same population size because I'm testing more. Now the sample that I've tested is more 5 lakh rupees. I identified zero misstatement. So the total tested is 10 lakh rupees out of the population of 25 lakh rupees. The misstatement is 1 lakh rupee, and the projected misstatement for the total will be somewhere around, I think, 2.5 lakh, if I'm not wrong. Just let me do a quick calculation. Yeah, 2.5. Yep. So 2.5 lakh. Is it material now?
No.
No, not material. Not material. So let's say, for example, if I closed my testing at this stage only, round one, there was a sampling risk that the conclusion I have obtained about the population that it contains a misstatement was wrong. Like there was a sampling risk that my conclusion was wrong if I would have closed my testing over here.
Yes, sir. Definitely conclusion is wrong. This is a false positive. The first one is a false negative, second one is false positive.
Yeah. So not false positive, but like here I would say rather it was a kind of a scenario where my sampling risk was very high. It was not a false negative, but I'll explain what is false negative and false positive. Okay. Uh,
Sir,
so that is one.
I mean to say without the further testing, when he is concluding that there is a misstatement on the 5 lakhs, he is assuming that the remaining amount 20 lakhs, there will be the misstatement. That
Yeah.
is what I am saying, that is false negative.
Yes, false negative. Correct. From that
And
point of view, yes.
yeah, on
But
the false positive, what I'm saying, he assumed that out of 5 lakhs he is tested, all is positive. He concluded that the remaining 20 lakhs, there will be the no misstatement. That is called false positive.
no. I'll tell you something called false positive, how it works. So
Okay.
I'll consider a separate scenario for false positive. So the separate scenario is, let's say, population 5, sample 5. Now I'll change the misstatement and the projected misstatement. So let's say in the first 5 lakhs, when I tested, the misstatement was 0. So what you project? 5 lakh, 0. The final projected misstatement will be 0. Are you getting? So what I thought, okay, there is no misstatement at all. Everything is fine. But I thought, no, let's go for round two. When I went for the round two testing, out of 5 lakh samples that I tested, my misstatement was 5 lakh. So total misstatement out of 10 lakh become 5 lakh. And what will be the projected ratio now? What will be the projected one? 12.5 lakh. So in this scenario, if I would have closed my testing over here, my conclusion was everything is positive. If I would have closed my testing here, I would have, came to a conclusion that there is no misstatement. And there was a sampling risk called false with a false positive. Okay. So my sampling risk in this scenario was that the positive that I'm considering, that everything is fine, good, true and fair, it's actually not there. It's actually not there. And in this scenario, the sampling risk was false negative, that the thing I'm considering, that there is a material misstatement in the entire population. But by the end, I realized it's not there. So this is a sampling risk, false positive and false negative. That when you draw conclusion on the basis of sample testing for the entire population, your conclusion could be wrong. And that is the sampling risk. False positive, false negative. Clear? Any doubt?
Yes, sir. Clear, sir.
Okay. Now let's go to the standard. Like we have discussed a lot of concepts, and how whatever we have discussed. Let's see what standard says, and like it is on the similar line. But let's go to the standard and then understand each and everything quickly. So objective with respect to the sampling is to draw conclusions about the population from which the sample is selected. So my objective is to draw conclusion about the population, and for that I will use audit sampling. Now again, population is the entire set of data. Sampling risk that we already discussed is nothing but the conclusion based on the sample may be different from the conclusion if entire population were subject to the same testing. Audit procedure means testing. So if you would have tested the entire population, your conclusion would have been different compared to when you are testing only a sample. Okay. Again, false positive, false negative are the scenarios which are given over here. Then non-sampling risk. It's kind of a risk that you reach to a conclusion which is not correct, but not because of the sampling, because of something else. Anomaly is kind of a deviation which is one of the nature, very small, one of the nature, does not represent the entire population. So deviation, misstatement, but it is not representing the entire population. That's called an anomaly. Okay. Sampling unit, one single unit. Yes.
Sir, sir, give example for anomaly.
Okay. Very good example I will tell you for the anomaly is R. Or let's say, for example, not even R. Here, it's not a misstatement per se, but let's say I. You may call something similar as an anomaly. I'll tell you why. In case of the I, where there's a refusal from the management, you cannot project this on the entire population. Because this is one of the case where management is denying to you. Although it's a misstatement, I'm not denying it. But it's in kind of an anomaly where you cannot project the misstatement of I to the entire population. Can you? Yes, no?
No, sir. We cannot project based on this.
Yeah. So anomaly is nothing but a misstatement of deviation that is demonstrably not representative of the misstatement of the deviations in the population. So it was one of the case where management denied, please do not proceed with the confirmation without any reason. In rest of all the cases, management gave you permission. So that is can be called an anomaly. It's a misstatement, but an anomaly. Statistical sampling, that is random selection or probability theory that we have discussed. Stratification, dividing into subpopulation in groups, that we also discussed. Tolerable misstatement, kind of a margin of error. Okay, monetary amount set by auditor to seek to obtain appropriate level of assurance, which is not exceeded by actual misstatement in the population. That means a level that you expect, okay, the margin or the error will be there, but the actual it will not increase beyond that. Same when I talk about margin of error for the controls, it's called the tolerable rate of deviation. Okay, in case of controls. So this is applicable for TOD. This is applicable for TOC. Now, when I want to achieve the conclusions on the population from sample testing, I need to do something. First of all, I need to design an audit sample. considering the characteristics and the audit procedure. We have discussed that. Whenever you have to test some samples, think which is the more appropriate way. Should I go for sample testing through this way? Should I select the sample through this way? So that is depends upon the characteristics and the audit procedure, or the your target, what you want to achieve in that particular scenario. Determine a sufficient sample size, okay, to reduce the sampling risk to a low level. Now again, when I gave you a formula for the sampling, that was a simple formula for the random sampling. But if you are using any other statistical model, or if you are using any other model, you need to define your sample size based on that model and based on that formula. Okay. Now, very important part, that auditor shall select item in the sample in such a way that each sampling unit in the population has a chance of selection. You should not select top 10, top 5, because at that point in time, it will become difficult in this area. Okay. Then perform the procedures. If audit procedure is not applicable, replace the item. Unable to apply, treat that item as a deviation or as a misstatement. We discussed this point. Okay. Then you need to understand the nature of deviation and their possible effects, because otherwise, how will you determine, like what to do further on those deviations? So we need to understand. We have that. We have already seen that. When you identify any deviation or misstatement, evaluate what it is, and then decide the rest of the audit procedures you need to perform. Okay. If it is an anomaly, okay, in that case, you need to make sure that, okay, it is anomaly and it does not affect the remainder of the population. If it is the anomaly, make sure it does not affect the entire population, so that you can do the projection appropriately. Otherwise, you will not be able to do the projection appropriately. So for the rest, for the test of details only, not test of controls. That's why I said I'm excluding test of controls from the projection. For the test of detail, project the misstatement found in the sample to the population. Remember, test of control not included. Second, anomaly also not included, because anomaly does not represent the population. So you cannot project. When I talk about anomaly, that says that it is not representative of the population. So anomaly should not be projected. Okay. And then evaluate the sample, whatever outcome it is. So after doing the sample, evaluate the results of the sample and use the sampling other methods if there is there, or if you want to do further procedures, you can do that. Okay. So whatever conclusion you get, you evaluate that. So that is the requirement of the standard that we understood. Any doubt with this with respect to SA 530 audit sampling?
So this is the module, sir, you are reading, sir?
This is the bare text of the standard.
Okay, sir. Because I'm also having the module, but it is not showing what you're reading, sir.
So in your module, now I'll take you to the module, study material. Study material has a wonderful chart on SA 530 for quick revision, this one. Because these standards are already covered in your intermediate, that's why you have a quick chart for the quick revision over here. But I'm taking every standard in full detail. That's why we discuss the standard from the bare text itself. Okay, you have a very good chart on page number 510 on SA 530. Any doubts? Anyone? Anything? Any doubts? Any questions?
It's clear, sir. Thank you.
Ayush, your question with respect to post December 2018. I specifically don't remember post December 2018, but there might be. There are scenarios where there are changes. So I remember that there are some standards have changes post December 2018. Any specific reason you are asking for the December 2018? Again, I need to check. I'm not sure of 18 because I remember there was a change in 570 if I'm not wrong. I say 570. It was I think 17 or 18. I just need to check. But whatever bare text is there, it is updated one, so you can refer. So whatever bare text we are covering, study material we are covering, it is updated till today. Okay. If no doubts, let's take a quick 10-minute break. After the break, we'll proceed to the next standard. Yes. So now the next part or the next topic that we are going to take is SA 550, related parties. Very important and very critical area for any of the audit. Okay. Why very critical? Because SA 500, or when I talk about specifically related parties, they are always looked from the heightened risk. I am not saying that there is a material misstatement always, but there is a chance of heightened risk. And there is a chance of, higher risk in the related party transactions compared to others. Okay. Now, uh, the first thing we need to understand is what related party is, or who are the related parties. Can anyone tell me what do you mean by related party? The term related party. What is a related party? Who is the related party?
Sir, related party, the party as defined in the financial reporting framework. First, we need to check that.
And what would be the financial reporting framework in this scenario? Like, let's say, for example, company. How will you define a related party for a company?
If the company is, example, more than 250 crore or listed company, then India is applicable.
Yes. Okay, let's say India is applicable. I'll take for a time being India is applicable. How will you determine related party? What is the definition of related party then?
Related party is a control and significant influence and the common control. Let's talk about the common control in that other entity.
Okay. So which standard you will follow for that?
Control specifically is talk about 110 and the consolidation in the control is talking. And related party, I think India is 21, I believe.
Okay. India is 21, or the control definition wherever it is. Okay. Anyone else with some different answer here or something further to add? No? Okay. We will understand with example only the term related party, because see, that's where the everything starts. If you are not clear who is the related party, how will you apply a procedure or a standard in that scenario? Let's say company private limited, turnover 500 crores, turnover 500 crores. Ind AS applicable. Definition of related party. Now, that definition of related party, you are saying you will apply the financial reporting framework, that is Ind AS. I'm saying, okay, fine. Ind AS 24, related party disclosure. That is one of the scenario. What else? Is it sufficient?
No, sir. If not, then they're defined in that 550.
I'm talking about as of now applicable financial reporting framework.
Okay.
a definition of SA 550 we'll discuss in a while. Now let's go for the definition of related party as per the applicable financial reporting framework. Now determine the applicable financial reporting framework here for the purpose of related party.
Yeah, that person and its relative and
Don't give me
directly and
like, no. Let's not go into the definition. Only reference of the definition where it is specified. Anyone? Apart from Ind AS 24, where the related party definition is, will you apply something else? Very good,
yes,
Sanjay.
sir, we have company site as well.
Yes. Okay. So, yes, now I'll tell you. It's not only Ind AS 24, it is the section 276 of the Companies Act, which talks about the term related party. So first of all, you need to understand like what is the applicable financial reporting framework, and you have to see related party is such a scenario which is defined at multiple places. If I change a bit here, if I change a bit, let's say if I remove this private limited and if I say company listed, two more things will come into picture for the related party definition and applicable financial reporting framework. One is the SEBI regulations, LODR. Okay. Plus, recently SEBI announced something more onto the related party. So circulars are also there for respective related party circulars and notifications. I think some are there. So that will also get included in your applicable financial reporting framework. Now that's where the main thing arises. As I said, company listed. If I talk about, instead if I change one single word over here, instead of company, I say bank listed. Everything which is you are seeing on the screen will be applicable. Plus, there will be more. RBI Act and its directions for the related party. That is also get included. If I change insurance, it will be insurance company. If I change NBFC, again, the RBI Act and directions. And whatever related party references are given in that. So understand what is applicable financial reporting framework for the related party, and then you proceed. Because this is a very important part, understanding the applicable financial reporting framework. And very less attention is being paid to this area. Practically, if I talk about this particular part, a lot of less attention is paid to identify the applicable financial reporting framework for related party rather than the testing which is being done. Okay, let's assume this is the scenario. Let's assume another scenario. I'm talking about sole proprietor liable for tax audit. Now, what is the applicable financial reporting framework over here?
That the income tax related party.
Okay, income tax related party. Good, very good. What else?
AS related party.
AS related party, absolutely correct. AS related party, because it is a non-corporate entity and accounting standards are applicable to non-corporate entities. So AS related party definition. So still it has the financial reporting framework applicable. So you need to think from the point of view, even sole proprietors has applicable financial reporting framework and the accounting standards applicable to them.
Yeah,
Okay.
also that is GST related party when GST is applicable.
Yeah, so again, depends upon what type of audit you are doing on that particular area. So in that scenario, if a applicable financial reporting framework is there, fine. If not, then standard also gives you the reference. Then if, let's say for example, you are stuck in an edge case scenario where you don't have applicable financial entity for the purpose of related party, in that scenario there are some specific description of the related party. What is a related party is given in the standard itself. We will go through that. So that includes a person or an entity that has a control or significant influence, okay, directly or indirectly through one or more intermediaries over the reporting entity. So control and significant influence. Second, another entity over which the reporting entity has a control or significant influence, directly or directly through one or more intermediaries. So first we are talking about that parent has a control on subsidiary and the subsidiary is the reporting entity. So here in this scenario, if I explain, parent company having control on subsidiary and this is reporting entity. In this scenario, second number, okay, parent is a reporting entity and it has a control over subsidiary. In the third scenario, we are talking about another entity that is under the common control with the reporting entity through having common control ownership, owners who are close family members, common key management. Okay, that is a scenario where you have a parent, you have a subsidiary 1, you have a subsidiary 2. They don't have a control to each other. Subsidiary 1, subsidiary 2 don't have a control to each other. But by the virtue of this common control, they are the related party. Okay. So you can say common control, they are the related parties. Now, any one of them can be a reporting entity. Like if as subsidiary 1 is a reporting entity, subsidiary 2 will be a related party. If subsidiary 2 is a reporting entity, subsidiary 1 will become a related party. Yes, government is excluded in this. So government controlled by a state, national, regional, local government, not considered related. Otherwise, each and every public sector undertaking will become a related party. Clear? So this is the definition of the related party, either as per the applicable financial reporting framework, and if no or minimum framework requirements are there, okay, if the framework does not establish any requirement, then go by this way. Clear? Any doubt?
Sir, here the government company is excluded, but it's given that there is a significant transactions or share of the resources, then it is a related party. What is that, sir? It's mentioned.
Yeah, unless they engage in a significant transaction or share resources, means that, let's say for example, you have this scenario subsidiary 1, subsidiary 2. Now assume a scenario, two banks are there. Bank 1, PSU, I'm talking about PSU. PSU Bank 1, PSU Bank 2. Okay. Now, by just being a PSU, it does not mean that they are the related parties. Just being the PSU does not mean the related party unless they have a transaction between them, and that to be a significant transaction. For example, okay, Bank 1 has given major loans to Bank 2. Bank 1 has given major loans to Bank 2. So unless there are significant transactions or share of resources to significant extent, just by calling them the PSU, just by having them under one umbrella, that is a public sector undertaking, or controlled by the state national government doesn't make them related party. Simple example, if I give you an example, let's say NHAI. What is NHAI? Can anyone tell me quickly?
National Highway Authority
National
of India.
Authority of India. National
And
Highway
SBI.
Authority of India.
Let's say both are public sector undertakings. Yes, National Highway Authority of India and SEBI. SBI. Both are public sector undertakings. Just by having a public sector undertaking, if they don't have any transaction, should I include them in the related party list?
No.
Now, SBI granted loan to NHI. I'm just hypothetical example. Don't go on the news and quote that no, we have the information. Just hypothetical example. Gave the loan of rupees 5,000 crores. This will become, if it is significant, it will become related party transaction. And that too, if it is not specified in the framework. Now, if the framework is there which excludes these type of transactions, you need to comply with that. Are you getting the point? If your framework says that significant transactions between the related party to be excluded if they are controlled by the government, follow that. But when the framework is not there, at that point in time, when I'm applying the definitions of the SA 550, at that point in time, this 5,000 crore transaction I will consider as a related party transaction. So I'll add star mark. That means subject to applicable financial reporting framework. Simple. First, look into that. If no information, nothing guidance, nothing provided, then come to here. Clear?
Yes, sir. Clear now, sir. Thank you.
Okay. Now, the second question is with respect to, like, okay, we understood the definition of related party. Fine. Transaction between related party will be related party transaction. Nothing difficult in that. But the question comes is, what is the objective of the auditor? Why we have this standard in place? What is the reason behind it? What is the reason of having this standard? Anyone? What is the reason of having this standard? What is the objective of auditor? Why I want to dwell into related party transaction? What is the reason?
Sir, first, auditor obtain the audit evidence whether the related party relationship and transaction are appropriately identified, accounted, disclosed as per the accounting framework.
Okay.
Sir, auditor has to obtain sufficient and appropriate audit evidence that related party transactions are appropriately disclosed, they are appropriately accounted.
Okay.
That is as per applicable financial reporting framework.
And also to obtain the understanding of the related party relationship and transaction.
Why?
Because we need to obtain and understand what are the relationship existing. The company is provided to auditor. What is the relationship and what is the transaction involved in it?
But what is the reason? Why I want to understand that? What is the reason for this?
Conclude that statements are represent a true and fair view and are not misleading.
Sure. The thing is that whether the transaction is in line with the arm's length price. See, if it is in the arm's length price, then there is no issue. They can have it.
And what if it's not on the arm's length price? What is the issue in that? Is it a misstatement? If let's say related party doesn't have the transaction on arm's length price, will you call it as a misstatement?
Yeah, definitely
No,
it is a misstatement to the.
sir.
Yeah, definitely it is a misstatement,
So,
sir.
no, we
Someone
will
is.
check the business rationale applicable terms of the transaction, Section 143 of the Companies Act, and check whether the transaction is appropriately disclosed.
Yes, appropriately disclosed. Okay. But do you think anywhere it is written that the transaction with the related party has to be on arm's length price?
No, sir.
Of the place,
Uh, I think there is some disturbance in someone's like.
yeah, so, arm's length price is the price when the transaction is between the unrelated party, whether the same price is done with the related party transaction.
No,
In
no,
the
but is it somewhere written that the transactions should be at the arm's length price between the related party?
Sir, even if it is not at arm's length price, but the its disclosure, its accounting is appropriate, then it's okay.
So you are saying if it is not at the arm's length price, fine, but the disclosure should be appropriate.
No, but it will be impacting our profits.
sir,
What
we
is
go
it
try.
is the beneficial to you? Let's say I'm purchasing goods, it's very low cost. It's not at the arm's length price, purchasing goods very low cost.
Sir, if its accounting is appropriate and we are showing the substance of the transaction in the books of account, then it is okay.
To recognize the fraud risk factor, sir, whether that particular transaction is involved any fraud risk factors.
Okay, I'll tell you. Yeah. So it has to do with two important concepts. Number one, fraud risk factor. Absolutely correctly said. Why? Reason because I am saying now that it's not on the arm's length price, okay, but it's beneficial for the company. Till the time you go and test, how will you identify this one? I don't have any information on that. If it is not on the arm's length price, then there are chances that it may other side also prejudicial to the interest of the company. Now there is one section under 143. I'm not sure you guys remember it or not. There is
S-
one particular point. Can
Section
anyone
2.
tell me what is that? 143 on the interest of the company.
Yes, sir. There is a cargo reporting.
Not Caro reporting. It is something else. It is normal 143. So there is one point in the 143 which
Whether
talks about
whether
something.
the transactions entered are prejudicial to the interest of a company, but in favor of the related party transaction.
It doesn't say the related party transaction, yeah, but it talks about whether the transaction of the company are prejudicial to the interest of the company. Okay, like whether loans and advances made by the company, whether the transactions by way of book entries, okay, whether you can say other transactions which are there. Like 143 1 talks about something on the prejudicial to the interest of the company. Okay,
It's
proprietary.
yeah, it's about the inquiry.
Yeah, proprietary matters. So that is, you do inquiry on the proprietary matters, whether the transactions which are taken place are to the prejudicial to the interest of the company. And if a transaction is not at the arm's length price, there are chances that it is the prejudicial to the interest of the company. See, when I say not at arm's length price, that means either you are getting benefit or you are at the loss. If you are getting a benefit, someone is getting the loss for that. If you are getting the loss, someone else is getting benefit. So there are chances either you will get benefit or you will get a loss. So it could be a prejudicial to the interest of the company. That's why it becomes important to understand whether the transactions which are there are at the arm's length price or not. Are you getting the point?
Yes, sir.
Now
But
that is Yes.
Just one clarification. But per se, we will not see whether it is at arm's length price. But if it is at arm's length, if it is not at an arm's length price, but it is not prejudicial, then we will go ahead with it. We will give a go ahead.
See, in that case, again, disclosure is there. Now, for example, if it is not at the arm's length price, you are at the benefit. Now, in that scenario, that is the benefit which is not true and fair presentation. You are getting benefit at someone else's cost, which is not appropriate. See, today I'm showing a profit in my company, which is pumped up profit because I'm showing the transaction which is not at the arm's length price. I'm showing this to show the good picture. Whenever I say it's not at the arm's length price, it is at the benefit of the company. Yes, it's a problem because it will not give you true and fair presentation of the financial statements.
Then it means that it has to be at the arm's length price, no?
Yes, yes. That's why you have a transfer pricing provisions. You have different requirements for the arm's length price.
Correct, sir.
So in that case, it becomes very important that transactions have to be at arm's length price. Otherwise, a lot of complications and a lot of fraud can happen easily. Like for example, a company which is outside India, I'm reporting losses over there. Company which is listed in India, I'm booking profits in that, and I'm getting the benefit of the share price going up and up every year. Doesn't make sense. Are you getting the point? Plus,
yes,
there is a requirement, if I'm not wrong, in the board's director's report, where they need to specify on the related party. So in the director's report also, if I'm not wrong, there is a requirement that director has to report that, that whether the transactions are there at the arm's length price or not.
Yes, sir. It is a requirement as per the section 188. In audit report, the related party transaction has to be reported.
Yes. Plus, director has to report in his director report that the transactions are carried at the arm's length price. So that is one of the also requirement where director reports, and if they are making that statement, again we have to verify that. Clear? Okay. Now that was with respect to arm's length price discussion. So not having arm's length price could be a problem, could be a risk to the company. That's why it's necessary for us to recognize whether there is a fraud risk factor, okay, with respect to the related party transaction and relationships. Number two, whether the financial statements provide true and fair view and are not misleading, and whether the disclosure which is there as per the applicable financial reporting framework is carried appropriately or not. Are you understanding the point? So that's why it becomes very crucial to understand the financial reporting framework, arm's length price, and the objective of the auditor. Why we want to go into this? What is the reason? Okay. Now, so the question comes is, do you think having a related party transaction is a misstatement?
No, sir, it's not a misstatement. If it is rightly having the transaction, it's not at all misstatement. Right to have those transactions.
Absolutely correct. So if you have a related party transaction, it doesn't mean it's the misstatement directly. No. But having a related party transaction gives you a certain kind of risk in the financial statement that you need to evaluate. That whether there is a fraud risk or not, whether the financial statement achieved true and fair presentation or not. Okay. So if we go quickly to the objectives are to recognize the fraud risk factors, to conclude whether financial statement achieved true and fair presentation, are not misleading, and where applicable, whether the financial reporting framework establish related party requirements. Okay. And if yes, then whether it has been disclosed in the financial statement in accordance with the framework. Now, understand one thing: fraud risk factors, arm's length for the achievement of true and fair and not misleading is irrespective of the financial reporting framework. Disclosure is as per the financial reporting framework, fine, not an issue. But let's say if the financial reporting framework is silent on the disclosure part, does that mean that we will not check for the misleading financial statements? We will not check for the fraud risk factors?
No, sir. It's not like that. The auditor
Yeah.
has to be.
Absolutely, yes. So at that point in time, even if the financial reporting framework doesn't give me any requirement of reporting related party transaction, I am still bound to check for the fraud risk factor. And as per which standard I'm required to check?
Which one, sir?
Fraud risk factor.
240.
240. Yes, 240.
Yeah. Yeah.
And I want to check whether the financials achieve a true and fair presentation. Where it is written?
200.
200,
Very
sir.
good. Overall objective. So overall objective, SA 240 already places a requirement on me that check the financials. They should be true and fair. Check for the fraud risk as per 240. So it doesn't matter what your financial reporting framework says about disclosure. Irrespective of that, you need to go for this. And then whatever disclosures are there in the financial reporting framework, check for that. Clear?
So
Yes,
in
sir.
this section 188 also follow the Companies Act 177, 188.
Yes, 177 audit committee, 188 related party transaction. So it is there, like approvals and everything you need to obtain. So that will be there in the applicable financial reporting framework.
Yeah, every related party transaction will be approved by that audit committee as per section 177. And
Yeah.
it's 188 talks about loan to directors.
There are multiple things covered in 188, but yeah.
And also 184 is there, the disclose of the interest of the director.
Yes. So 184, 185 loan to directors, 187 investment, 88. So there are multiple, 189 contracts and arrangement. So the multiple sections on that will form part of your applicable financial reporting framework.
And the Caro also is there.
Taro is for reporting, basically. It is not the applicable financial reporting framework for the company. It is
Right.
for the auditor to report additional items.
Yes, sir. This is on the reporting perspective of the auditor.
Yes. Okay. Now, any doubt with this part? Any doubt with respect to the objectives?
No.
No. That's really great. Okay. Fine. If no questions on the objective part, now the question comes is how to achieve the objective. So the objective says that obtain this information, sufficient and appropriate audit evidence that there is a fraud risk factor. You need to assess that. You need to make sure that financial statement achieve true and fair presentation are not misleading, whether the framework which is there, which is followed or not. So how to achieve the objective? Now, in a simple terms, how will you test that related party transactions are at the arm's length price and they are not misleading or not, fraud is not there in them? How will you do this? Forget about the standard. I'm giving you, like, let's say you are given an audit. Tomorrow you need to start with the related party transaction testing. What you will do? How will you test? How will you obtain sufficient and appropriate audit evidence?
Under SA 315, understanding the transactions with related.
How? How will you understand? Okay, SA 315, but how will you apply practically on ground?
Sir, firstly, we need to get the full list of related party transaction and related parties.
Okay.
Without getting that, we cannot go and apply any other things.
Okay. So we'll get the full list of related parties. Yes, very good. What else?
First, then we need to understand the related party transaction and related party relationship.
Okay. Okay. Then what else? I understood the related party transaction. Like, okay, the company has a subsidiary. They purchase goods from them. What else?
Okay, then whether it is in line with the arm's length price or not, that we will verify it.
Okay, let's say for example, you have a sales invoice of that entity. Everything appears to be as arm's length price on those sales invoices. The goods, sorry, purchase invoices. So goods are being purchased at the arm's length price and payments are being made. Then what else? Fine.
Then everything is fine. Then definitely whether those information is disclosed in the audit in the notes to the account by the company, then everything is fine means then we don't have any issue on that as a auditor.
And the outcome will be gross negligent then. I'll tell you why. So the reason is
Then that class 7 will apply on the second study part 1.
So most of us we are talking about scenarios where we have the information provided by the management, list of related parties provided by the management, transactions disclosed by the management. Fine, but how you are checking the completeness of that? Go to the assertions, go to basic. See, when I talk about related party transactions, the risk is with respect to the related party transactions, I have a risk with respect to certain assertions. Number one, existence and occurrence. What if there are fraud transaction happening? So existence and occurrence is a problem for me. Number two, accuracy. Is it at arm's length price? Let's say fine, occurring, but whether it is the arm's length price, accuracy and the valuation becomes a problem for me. Occurrence and existence rights, or you can say for the rights and obligations for the balance sheet one. Third, very important, completeness. How will you ensure that whatever transactions disclosed by the management are complete? Whatever transactions you are testing, there is no any other transaction of the related party present in the books of account. If you don't get comfort on the completeness, how can you get the comfort on the accuracy and existence and occurrence? If you missed out certain transactions, means you missed out entirely on all the assertions. Go to the basics, go from there, and then try to build your audit strategy. Always go to the basics. So first, if I have a related party transaction list at the financial statement level, good. Now think of the assertion level. What and where the risk lies. Then go for, let's say for example, if related party transaction is there, existence occurrence, accuracy valuation, complete net, what else could be the risk here? What else could be the risk? Come on guys, quickly, easy.
Management is not previously identified.
That is completeness. That is completeness.
Risk of fraud is there, sir.
Again, see, risk of fraud or risk of related party transaction will be at the assertion levels. What is a fraud risk? Fraud risk, when I talk about fraud risk, means transaction has not happened and I'm still recording it. So it impacts the existence and occurrence assertion. Yes or no? Or accuracy, valuation occurrence, completeness occurrence, assertion. So these are the assertions at which the fraud risk also impacts. So when I talk about revenue recognition, fraud risk with respect to the revenue recognition, it is there at the existence occurrence. It is there at the accuracy, at the completeness, which of the assertions still are there, like where you can think of the risk.
Non-disclosure by management.
So is there any control around that RP?
Assertions. Cut off. And the last one is a presentation and disclosure. This is as per applicable financial reporting framework. So these are the areas where I will have a risk. Now I need to decide procedures based on that. Controls testing, unidentified, the related party transaction testing, everything is based on assertions. For example, I'll simply explain you with examples. Let's start with the existence and occurrence or completeness. To understand the completeness, what I will do, first of all, I will ask the related party list. Okay, tell me who are the related parties. I'll ask the related party transaction list. Tell me what are the transactions you have done with them. Second, what you will do to ensure completeness. Now I got the list. Okay, what else you will do to ensure completeness? After having list, what else?
Then we will check the control, that what is nature of relationship, that control, what is our completeness.
Control will never, if you are testing what is already disclosed, then how you get the comfort on the completeness? My question is pretty much simple. If you want to ensure that the related party transaction list is complete, nothing is missing from there, nothing is hidden by the management, how will you ensure that?
Sir, we will do the inquiry, sir. Inquiry with the management.
Like for example, if you went to management tell me, is there any related party transaction not disclosed in this? Do you think they will say yes to it? No. So inquiry.
We will get written representations from the management then.
As per SAF, say actually we have other alternative. We can always check that loan given, joint venture, associate,
Absolutely correct. Very good.
security investment, all these things cross verified.
Correct. So to ensure completeness, once I get the list, minutes are there, then I will compare the list with the last year comparison. Okay.
So
then
there
I
is
will check with the
procedure.
public records. You can easily go and check the public records with respect to the directors and managing directors of the company. You will check minutes, you will check agreements, you will check joint venture agreements, contracts, big contracts, agreements, a lot of things. You will check for documents which are there, which will be significant documents, to understand is there any related party which is not reported, and by this way you can get the comfort on the completeness. Undisclosed related party.
And also we can verify that audit report also, the subsidiary audit report, associate audit report, CFS, like that.
Yeah, public records. Yes.
In short, substantive procedure for the audit procedure.
See, there are two things
Substantive.
involved in the completeness. I'll tell you. One is the substantive procedure that we will perform. Number two, control testing. Now, what controls management have to ensure completeness? How management makes sure that all the related party are reported in the list? What is the control management has set up behind this? Let's say, for example, management comes up and says to you that we have a control that on every quarterly basis, we go through the list of related party, audit committee goes through the list of related party, they reviews it and they verify it. Like if there is any changes are required to be made to this or not. So there's a control that quarterly related party list is reviewed by those charged with governance, that is the audit committee, for the completeness. Now, once you will test the completeness, once you test the control, okay, there is a control. This is being performed or not? Fine, performed. Okay. But still here, I have a very high risk of fraud. So that's why my substantive testing will be high. I will check all these things to make sure that I am not missing any related party or which is not disclosed to me. Clear? So yes, I will perform inquiry. Management tell me who are the related parties. But I will also ask management tell me how you identify related parties. What are the changes compared to the prior year? How you ensure that your list is accurate? Like, for example, you are not written associate as a subsidiary and subsidiary as an associate. How you ensure that the director, who is the managing director of the company, who has been newly appointed, let's say newly appointed CEO and the managing director of the company, has reported all the companies in which he is the managing director or even director. How you can ensure that? How company ensures this kind of reporting? Then once we have all that information, we will understand the nature relationship between the entity. We will understand the transactions that are taken place during the period, their purpose of the transaction. And then we will go for the applicable financial reporting framework. So what is the financial reporting framework? Are we required to disclose that as a transaction with associate, with a subsidiary? Do they need to be authorized as per the Companies Act under Section 188? Whether appropriate approvals are there or not? Okay, whether it is outside the scope of the company, AOA, we go and check AOA also, whether it is permitted by the articles of the company. Is it something called ultra-virus beyond the object? So we go and check with respect to the financial reporting framework. Who authorized? Is there any control behind the authorization of the related party transaction? Like how they make sure that all the related party transactions are authorized? Who authorized it? Yeah.
Yeah, how approved, how what is the control for the disclosure, all these things.
So what is the compliance control around the obtaining approvals as per Section 188? Who ensures that the Section 188 is complied every time when there is a related party transaction? So these are the controls which are incorporated in the companies. And trust me, nowadays, a lot of chartered accountants are providing this kind of advisory to the companies that how to have these controls, how you should design the controls, whether there is any missing control or not. That's a separate story. But yes, this is also happening. So how the controls should be, what the controls should be, how to understand related party transaction, everything. So you need to go from the basics, understand the requirement of each assertion, and then go ahead with respect to the testing part. Okay, now let's go through what standard says, and trust me, it is on the same basic part. See what it says: as a part of risk assessment procedures and related activity, as per 315 and 240, we also understood what is 315 and 240. You need to identify risk of material misstatement associated with related party relationships and transactions. When I say risk of material misstatement, this is at the financial statement level and at the assertion level, both. Okay. Now, how will you do that? You will inquire management, identify related parties, including changes from the prior period. We discussed, I will compare with the prior period. I will understand the nature of relationship between the entity. Okay. Then, whether entity has entered into any related party transaction. If so, then the type and the purpose of the transaction, that I will understand. Because of this, now let's say, for example, we were discussing about existence and occurrence. So I will check what is the type of transaction and the purpose. that will give me on the comfort on existence and occurrence. If I talk about accuracy and the valuation, I will check arm's length price. Okay, in this scenario, cutoff, I am required to check for the period. So all these things are already there. Like in the standard, if you go, it says that. If I talk about this one, this is the period to ensure the cutoff, type, purpose, nature of relationship. All these things are mentioned for a reason, because you want to gain the comfort at the assertion level. It is not something randomly written. So this period will give me comfort on cutoff. The type will give me type, and the purpose will give me comfort on existence and occurrence. Here, the nature of the relationship between and changes from the prior period will help me to, have a comfort on completeness. So I'm targeting assertions with my procedures. Then I will identify the related party transactions I will identify the related party transactions that management has given me, and I will obtain the understanding of the control on it. What are the controls established by the management? Now, the controls can be for identifying, like example, if I give you review by those charged with governance on quarterly basis, authorize and approve significant related party transaction, for example, review by company secretary or similar, like charter accountant, for compliance with section 188, authorize and approve transaction outside the normal course. Again, it can be similar control. One control can target two different kind of areas. So how the transactions are authorized and approved, which are normal transaction and outside the course of normal business. Now here again another risk comes into the picture. Fraud risk. Why? What was the need of having a transaction outside the normal course of business? And that too with a related party. There is a fraud risk factor. So in that scenario, you need to be more alert if you see these kind of transactions. Clear?
Yes, sir.
And how will you ensure the completeness? We discussed that to ensure the completeness, like to identify indications of the existence of the related party transactions and relationships not previously identified or disclosed. Completeness. We will go bank, legal, third-party confirmations, past auditors procedure, which are part of the auditor's procedures, minutes of the meeting that I discussed, other records, public records, auditor's report, last year's. Okay, documents that the auditors consider necessary in the circumstances will be reviewed. So these are the things or procedures you will do to ensure completeness. Risk at the completeness assertion. Okay, now let's say, for example, you perform all these things. You perform the inquiry. You gather the list. You gather the related party transaction list and related party relationship list. You gather all the minutes, meeting books and records, everything. What else you will do? What else you will do? There is one thing very important left. That is, there is one thing very important left. Quickly, guys. After getting the information, what we are required to do with the information?
Documentation.
And
Evaluation.
Before that, you need to do something else.
Understanding the transaction.
Share the information with the team.
Authorize.
Yes, sir. Yes. Share the information to team, and also if there is a group audit, the subsidiary team also we need to inform them. And any audit expert is used for them also we need to inform.
Because it's not necessary that you are going to perform all the procedures in every audit by alone. Other people are involved. Share with them. Remember, this we also discussed in SA 240. When I already say there is a fraud risk factor, same procedures of SA 240 will be applicable.
Yes, sir. We need to share the team first because they will be alert. They will be more cautious about this transaction. They will look into the matters.
Yes, share
Otherwise,
the information with the team. Yeah.
yeah, otherwise it will be duplicate of work. Again, we need to revisit the information. Then we need to pull the data.
Correct. Absolutely. And then see, once you do that, we will assess the risk. We will apply SA 315. Fine. And we will create the response and the procedures as per SA 330. So 315 and 330 will be applied. That is then the normal process. Fine. Now coming to the next part, very important part, which is what if you identify a transaction or a relationship which was not disclosed to you? What you will do? So you came up a related party transaction and the relationship which was not disclosed by the management to you. You identified that during your audit. Now what you will do? Tell me.
Which means that the management not disclosed that related party transaction and related party relationship, sir.
Yes.
First, we will get the confirmation. Then we will check the minutes of the meeting, loan agreement, like that. That loan, guarantee, security, investment, whatever is given, and also we can see the appointment letter, also the managerial position. What are the senior position? Appointment, the terms and conditions, what they agreed.
I'm saying, let's say, for example, there was a related party, let's say related party, a subsidiary company, which was never reported to you. And there are transactions happening with that subsidiary. What you will do now? You identified, okay, this is a new subsidiary that has been incorporated in the current year, and there are huge transactions with him that was never reported to us. Now what you will do?
We will communicate to the team members and if the component auditors.
Yes.
Yes,
and
sir.
then we will ask the management why they were not disclosed and understand the reason for non-disclosure.
Absolutely correct. Yes. Then.
And we will also assess why the control failed to disclose the related party transactions. Whether
Very
they were
good.
not properly designed or they were not properly functioning. Then we will perform substantive procedures and additional procedures to obtain sufficient appropriate audit evidence.
Yes, absolutely correct. Absolutely correct. So simple. If I talk about in the terms, once you identify the related party transaction which were not previously disclosed, the step-by-step approach will be: one, inquire with management. Then inform team. Do risk assessment and fraud risk assessment. See why control did not report. So there is a failure. For sure, there is a failure of the control which is targeting completeness of the related party transaction. So evaluate control failure. And you may need to do a re-risk assessment because till now you were relying on that control, but now the control has failed. It is not operating effectively. Either there's an issue in the design or not operating effectively. So evaluate the control failure. Okay. Then perform based on the risk assessment, based on the control failure, design the procedure and perform substantive. and evaluate the outcome. Plus, along with this, when I will inquire with the management, I will ask management, provide me the list of all the transaction with this party. So I will say that management, okay, give me the list of all the transactions with this party. Transaction that management had not previously identified. So I'll ask them, okay, now give me the list. I will inform other team members, as I said. Okay. I will request management to identify all transactions. I will identify why entities control over related party transactions failed, whether it's OE failure or DE failure. Makes a very big difference. OE means an operating effectiveness, DE means a design effectiveness failure. Then I will perform substantive procedures. And when I'm doing the risk assessment, I need to think, there are chances that there could be other parties also which are still not disclosed, not previously identified other parties. So I need to evaluate the risk accordingly. And I need to think of the risk of material misstatement due to fraud. So non-disclosure can result into a risk of material misstatement due to fraud. Plus, these are the procedures I need to perform: inquire, inform team, risk assessment, evaluate the control, substantive testing. All these things are required to be done for unidentified and undisclosed related parties. Clear?
Yes, sir. Clear, sir.
Now, tell me one thing. If you identify, remember, we discussed about something, that the related party transaction outside the normal course of business, there's a fraud risk factor. It is a higher risk. Now, how will you test these kind of transactions which are outside the normal course of business?
We will understand we will ask the business reason. What is the reason behind? See, so that we can check is there any window dressing is happened or not, like that. The terms of the transaction, whether they are consistent with the reason. See, if it is with the business reason, then there is no issue.
Yes. Okay. So absolutely correct. When I say fraud risk factor, you need to think from the risk factors. So when I say there is a fraud risk involved in that, okay. So number one comes is why this transaction was carried out. What is the reason why you went to carry out a transaction which is outside the normal course of business? Normal course of business still can be understood, but outside the normal course of business, so you need to understand the business rationale for that. What was the reason? Is it something to do fraud? It is something to hide something. So understand that. Then ask management. Management, once they provide you the business rationale, just don't accept on the face. So in audit, we call, there is a term, trust but verify. So you need to verify. Trust the management, what they are saying, but verify that. Verify what they are saying, whether the documents, the underlying things match with that, whatever they are saying. Do you think
So,
the rationale is reasonable? It is appropriate in the circumstances, and whether it has been appropriately disclosed as per the financial reporting framework.
yes, sir. Trust but test. Rhyming and
So that is the thing. So understand the business rationale. Okay, understand that transactions are consistent with the management explanation. Trust but verify, and transactions have been appropriately accounted and disclosed. And for that, you need to obtain audit evidence, whether they are authorized and approved as per the framework, requirement, compliance, all the things. And the very last and important part is your arm's length price, because this is where everything comes to a big question: accuracy. you need to make sure that whether they were conducted on a terms equivalent to those prevailing in the arm's length transaction. So you need to make that particular type of testing that you can comment on the arm's length price. Clear? And then you need to think for the disclosure, presentation and disclosure. So whether the accounting and disclosure of the identified transactions is appropriate or not. Okay, or they are presenting in such a way that it is creating issue with the true and fair presentation, or it is creating causing the financial statement to be misleading for the compliance framework. So how it is disclosed, how is it is accounted, need to think of that point of view. So this is nothing but presentation and disclosure as per FRF. Sorry. Okay. So this is your SA 550, related party transactions or related parties. How to audit them? Any doubt on this part? Any doubt?
Sir, subsidiary company given dividend to its wholly owned holding company, such transaction also covered related party
Dividend.
dividend.
See, it is kind of a related party transaction, but it is not the outside the normal course of business, because dividend is something which is given as per the Companies Act. So there are provisions for the dividend determination of the dividend under Companies Act, and if you have complied with that, there is no fraud risk as such if it is as per the provisions. Yes, but does it require a separate reporting? Yes. So dividend, whatever dividend is issued, you need to disclose in your financial statement.
सर आई हैव मैंने अभी सुना था रिलेटेड जैसे वेदांता लिमिटेड है, उसकी सब्सिडरी है हिंदुस्तान जिंक लिमिटेड. हिंदुस्तान जिंक लिमिटेड ने जो ट्रांजैक्शन किए ना, वो आर्म्स लेंथ मतलब हैवीली ओवर वैल्यूएशन का रिपोर्ट आया था. कोई सर्च रिपोर्ट किया था, ऐसा न्यूज में मैंने पढ़ा था. तो वो अपने को हमको जानना हो तो वो कहाँ पे रिपोर्ट होता है रिपोर्ट में?
See, I cannot comment on the public, like public companies or that, but like to provide you some background, these kind of reports are generally not available in the public, because these are forensic investigations or this any search or any investigation done by a department. I'm not sure. I have to go through the matter. What is the matter exactly? I'm not sure about that. But again, these are not publicly available information unless and until it is in the financial statements or in the audit report.
Okay, sir.
So, if you permit, sir, one question separately. So,
Yes,
we
sir.
will continue with this series till the end, till ethics. I mean, till 19.
Chapter 19 already done. So we started the series with the chapter 19 only, and then we came to 1, 2, 3.
But the remaining 800, standard 700, we will do. Sir?
Yes.
Okay, sir. Thank you. That
Those
is
will
what.
be there.
So, we have done only chapter 19 and 1, 2, 3, 4.
Yeah. Now with this, we will complete chapter 5.
Right, sir. Correct, sir. Thank you.
So rest of the chapters will be there, like 6, 7 till 18. So they will be there in the schedule. They will come.
Thank you, sir.
Any questions?
No, sir.
Okay. Let's take a few MCQs. Like I would extend the session for 10, 15 minutes, 10 minutes, Let's take few MCQs. See, again, practice is necessary for us. So let's do a practice of some MCQs and then, we can discuss further.
Okay, sir.
Let
Please.
me bring the MCQ. Okay. On your screen, you have a MCQ. I will read it. Messrs. Brilliant and Company are the auditors of Sparkle Limited. During the audit of 23-24, the auditor noted a significant transaction where Sparkle Limited sold a prime piece of land to a company called Solar Power Private Limited for a consideration significant below the current market value. On inquiry, it was revealed that the Solar Power Limited is a company in which the son of Sparkle Limited CEO holds a substantial interest. Management has disclosed this as a related party transaction. The management explanation for the low sale price is that the transaction is a part of long-term strategic alliance with the Solar Power Private Limited. But they provided vague documentation to support the rationale. According to SA 550 related parties, which of the following judgment is most critical for the auditors to make in this situation? So options are given. Take a minute, read the question and then try to answer. Come on, guys.
So it is C as per me.
Okay. Why not D?
So B will C is more important for this than B.
No, D for Delhi.
Sir, I also go with answer C, sir.
Why not D? D for Delhi.
So auditor cannot insist that they restate the transaction.
If you identify a misstatement, can you not ask the management to rectify the misstatement?
Yes, sir. Whenever the auditor find that mistake, the auditor can inform the management to rectify the mistake. And if they are not rectifying, then they can give the modify the opinion. That point is there actually.
But then why not D? Why C?
Why C means in this case, the question is very clearly the management explanation for the low sale price. The transaction is part of the arm's length price with solar, but they provided vague documentation to support the rationalization because they are not ready to accept the mistake. That is the reason I am going with answer C.
Okay. Anyone with a different explanation or some different option they want to choose for? No? Okay. C again. Yes, very good, Sanjay. Now understand one thing. What is an arm's length price? Arm's length price is something that you will charge to someone else. It is not necessarily the fair market value. If the similar kind of transaction where you want to build a long-term strategic alliance, if you sell a piece of land to them because you are going to get benefit in future from that particular, alliance or, contract or JV that you are forming, in that case, you might also provide to a non-related party at a cheaper price or at something discounted rate. It could be arm's length price. Fair market value is not equal to arm's length price every time. You need to understand the commercial terms where it is coming from. So the first and foremost critical judgment here, okay, in this particular scenario will be to understand, is there a fraudulent financial reporting or concealment of or misappropriation of assets? If yes, then ask them to rectify and bring to a relevant price which is there. Or ask the management, You have sold a land which is not appropriate. Now, see, once the land is sold, you do a registry and everything. You cannot just directly go and change the price in the books of account. You should receive the consideration. You should, alter the sale deed and everything. So at that point in time, you may ask the management now go and try to rectify the transaction by doing a different sale deed, get the additional amount, pay the stamp duty, document that, ask them to pay that amount, everything, which may be at the fair market value, which may be at a different price. I don't know. But the main important critical judgment will be C. That is, understand whether this is a fraudulent financial reporting. Is there any fraud risk involved in that because of the business rationale is missing? That will be the more important part over here. Rather than directly saying it's a modification, if you do not state at the fair market value, it will be a modification. That is incorrect. So your option C is correct. And the reason why D is incorrect is this term, fair market value, D stated. Not necessary. Understand the transaction and the commercials. A, it says that only verify the disclosure note is incorrect. We need to check for the fraud risk factor. B, written representation. See, again, written representation confirming that it's an arm's length price is not sufficient. You cannot solely rely on the written representation. That's why B also incorrect. The correct option is C. Clear? Any doubt?
Yes, sir. Clear, sir.
Okay. If clear, then let's proceed one more MCQ.
Yes, please.
So, CA Nidhi is a statutory auditor of Prime Builders Limited. During the audit, she identified a material transaction where Prime Builders purchased a large quantity of raw materials from Superior Steels Limited. The purchase is properly disclosed in the notes of financial statement as a related party transaction, since the director of Prime Builders is also a key management person in the Super Steels Limited. In the financial statement disclosure, the management of Prime Builder has included an assertion that the transaction were conducted on terms equivalent to those prevailing in the arm's length transaction. What is the CA Nidhi's prime responsibility under SA 550 regarding the specific assertion made by the management? So, read the question, take a minute, and then try to answer.
So it will be B as per me.
B, okay. Anyone else with some different answer?
Sir, for me also is answer B, sir. The C why I am not choosing the key audit matter is not a listed company.
Okay. Anyone else? With a different answer, something else to add? No? Okay. I'll tell you. In this particular scenario, what option says? What are the options basically? Option number A, accept the assertion without further audit procedures. That is totally incorrect.
Yeah, totally incorrect.
We cannot accept anything without verification. Otherwise, clause 7 will get attract.
Yes.
Okay. So A is incorrect. Now going to C, report the matter as a key audit matter in the audit report, as all such assertions in the related party transaction are inherently significant. That is not correct.
Yeah, that is not
Key
correct.
audit matters has to be, okay, I understand key audit matter has to be significant, but it is not like the scenario where all the assertions in related party transaction are inherently significant. No. What if the company has only one related party transaction? What if the company is of the having transaction which is kind of leasing? So it is not necessary that it is inherently significant. That is incorrect statement. That's why it will not be a C. Not because it's not a listed entity. So here in the questions, I don't have the information on the listed. So I'm not commenting on the key audit matter. But the statement that all assertions in related party transactions are inherently significant, not appropriate.
Yes, sir. Also, the key auditor matter, which is a significant matter to reader understandability. You should not deviate from or confuse with that matter, actually.
Plus, you need to, it should be one of the matters which is already reported to those charges governance as per SA 260. We will see as per SA 701 what is the scenario and how to determine key audit matters. But
yes, sir. Also, in that case, in they discloses is okay, but this is not form part of the key audit matter.
yes,
So
so it will
it's disclosed. Discloses is there. Any account presentation, disclosure. No, if it is there, then we are eligible to put the key audit matter, but it's not meeting the criteria of the key audit matter.
absolutely, yes, correct. So that's why it's not the correct option. Option D, request management to remove the assertion. Again, that is also not correct. Why we asked to remove the assertion? That is, we need to test. So you need to obtain sufficient and appropriate audit evidence to substantiate management assertion that the transaction was conducted at the arm's length clause. That is the main part. Okay. So your correct answer will be option B.
But the option A and D is totally irrelevant. But between the B and C, that B is correct.
Yeah. Okay. I think we have a pretty much fair idea of now SA 550 and the one we discussed before this 530. So what I would like, I would like you guys to do. Okay. Let me go back to the study material. So basically what I want you guys to do is go through the study material, all the standards that we have discussed. Practice the questions which are there. And in the next session, bring your doubts. Okay. Now, the next session, which is there at today's 24th, it is there on the 29th September, Monday, which is there. We will start with chapter number 6, completion and review. Okay. Read that chapter. It contains important standards. So till 550, we have covered over here. 560, 570, very important standards are part of your chapter 6. So please make sure you read that in advance when we will discuss, and accordingly we will take up the chapter number 6 and we'll start with that. Okay. So if no further doubts for today, I propose to keep that session till here and we'll discuss rest of the thing for chapter 6 in the next session.
Okay, sir. Thank you so much, sir. You have explained all the concept with a lot. You have provided a lot of examples also in each and everything. It's amazing, sir. Super. Thank you so much.
Thank you. Thank you very much.
Wonderful session, sir. Thank you very
Thank
much.
you. Thank you. Thank you.
All the questions you chosen are very beautifully taken. All the questions, sir.
The purpose is to make sure that you understand the practical part of the standard. See, it could be dealt in a way that, I provide you what is theory written. But till the time you don't understand logically what is the reason and why we are studying, doesn't, help you to remember the things.
Right, sir. Thank you so much. Good night.
Very
Thank you,
good.
everyone. Good night. Yeah.
All examples, sir. Very nice, sir. Thank you.
Thank you. Thank you. Thank you, everyone. Thank you. Session over, sir.